Checkout shares of AMC rebounding after Monday's 15% plunge. Today's comeback came on some absolutely blockbuster trading volume. Check this out. AMC traded more than 106 million shares today. That's more than Tesla, Facebook, and Nvidia combined. Our next guest is all in on this trade. He's an AMC investor who often talks about this stock on his YouTube channel, which has more than 372,000 subscribers. Welcome back, Matt Kors. Good to see you.
Happy to be here. Great to see you.
What is the mentality? What is the sentiment at this point, this far into the trade, having seen some pretty steep declines? Because as we go into the end of the year, there's concern with just the macro environment hitting high-flying stocks, especially the meme stocks. And a lot of new traders have never traded in this sort of environment before, haven't seen these, stocks move in integers down.
Yeah, I think you actually hit the nail on the head right there with, I think the prevailing winds are more concerns from the bigger players, the whales, institutions, hedge funds, and other things related to that, of being very, very cautious with this upcoming Fed meeting, being very cautious with a multi-decade high inflation rate. So I think you're seeing from the larger players a pivot out of some of what would be best be described as a high-risk bet. In terms of the apes, the retail traders, I think many people are still strongly holding on to this entire concept of diamond handing, because this play, this particular one, AMC, GME, it's much more symbolic of the fight for market transparency and fairness. Yes, we can chop up all these other trades, look at their revenues, their EBITDA, all that great stuff. But these two particularly, I would actually define it on the retail side as some of the easiest trades, because the people involved in it, they buy and they're waiting, and many, many people, and this might just be anecdotal, are willing to ride it all the way down to zero if need be.
Which sounds good, on paper, but when you have a lot of people who on the way up were so glad about it going up, being able to pay off their mortgages, et cetera, some life-changing amounts of money being made, that's hard to swallow. And so, Matt, when we take a look at the trading volume, and we highlighted today's trading volume being 100 million, its 30-day average is 41 million. Facebook, or Meta's 30-day average, is 21 million. So it's twice that of even Meta on just an average day out there. You're saying basically that all of that other trading activity, that's just people, other investors trading around, but the retail trader is holding on still?
I would strongly think that the data actually suggests that. I think with the high volatility, as we both know, there's going to be quite a bit of action between market makers and high frequency traders, because whenever there's high volatility, of course, and we're also comparing it to stocks that are numerically more valuable, so it's easier to trade, obviously more volume in a stock that's priced at a lesser volume, a lesser price in general relative to AMC. But I think with it, it's just the high volatility. There's going to be a lot of high frequency trading. There's going to be a lot of market makers. Yes, there is a lot of excitement in retail, but I think there's also some bigger players who are highly attached to this particular play.
You mentioned before that a lot of holders of AMC are believers in this notion that you can enact market change. Payment for order flow is one big issue, of course, that this community says should be solved, should go away. And I'm wondering, if you are an AMC diamond hander, should the pair trade be short Robinhood, which, by the way, saw its lowest level in today's session?
That's an excellent question. So overall with the apes, I think there's people who have their favorite equities, and I think a core pillar of being an ape is still really, really caring about market transparency, and that might not even be tied to a particular equity. But talking about Robinhood, I've said this publicly before, I have 3 words for you. I am bearish, bearish, bearish. If we dive into the fundamentals of what's going on with Robinhood, the last quarter, I believe they burned $1.3 billion. The quarter before that, they burned $500 million. It's safe to say that it's not a good situation there. The only reason previously before that they did well was kind of these idiosyncratic events, such as the explosion in Dogecoin, the explosion in GameStop, where they profited off of payment for order flow. But now in the previous quarter, we didn't have one of those wild events. They didn't really jump onto the Shiba train, so they weren't able to profit off of that. And now if we move this forward, when they're making money off of crypto and that's getting a little bit more quiet and off payment per order flow, which it really sounds like in the next calendar year, there's going to be fireworks on the regulatory front that very much relates to this. Their business model is very quickly falling apart. So if that's a quick fundamental breakdown, but on more of the social standpoint, I think one of the most difficult jobs of the year was to be on the PR team of Robinhood. It was a dumpster fire. The retail public very much lost their faith in the company, and I don't blame them. In the company's prospectus, they said a risk to them is a reduction in spreads between bid and ask. That is a risk to the company, which is something beneficial to traders. That's right in their own SEC filing. So I just don't see a way in which they can win the trust of the retail public back.
Matt, good to see you. Thanks for your time.
Thank you so much.
Matt Kors, it's interesting on Robinhood, Guy, because Robinhood was enabled by this wave of retail investors, and Robinhood might be seeing this decline in part because of a backlash amongst these retail investors.
Yeah, it's interesting, and I've said this for a while now. I said the only thing sort of novel or innovative about Robinhood was the name and the hair, and that's proven to be true. I mean, the stock goes down every single day, and it probably now is the level where maybe it makes sense just in terms of market cap. And quickly, in terms of the diamond hands things, which I totally get, by the way, and again, we've been pretty steadfast. We have the utmost respect for the guys and gals that have been doing this, but, you know, the William Wallace of this whole thing, you know, Adam Aron, I mean, recently just announced he sold 312,000 shares of AMC. He's the CEO. And the CFO sold 18,000 shares. So you would think if anybody believes in the story, it's them. It's just interesting. And then finally, and I'm not suggesting this is the case, but fundamentals should, you know, it's funny when fundamentals don't matter for certain stocks, but they matter for others like Robinhood. I just think you got to be somewhat consistent there.
Or some of these diamond handlers will say, oh, Spider-Man, that should move the needle on this. But that's a fundamental argument which hadn't been made before. Fundamentals shouldn't have mattered. And yet when a CEO or CFO sells, the CFO position selling the entire position that he has, that's just swept under the rug. Jeff, what's your take on this trade?
Yeah, I actually want to ask Matt about that because I know in the past he's mentioned the holiday movie slate and things of that nature. So I wonder if their thesis is more, okay, that's another momentum spark versus that's actually going to help the fundamentals catch up to the price. Because I think the second argument there is a really hard one to make. I understand the momentum argument. I actually tweeted out yesterday, you know, have the apes thrown in the towel, and they very quickly shoved that tweet in my face today with the volume and price action. But at the same time, maybe the momentum's not gone, but I think it's clearly waning. I think AMC, GameStop, broken that 200-day moving average. Guy mentioned the insider selling. The fundamental story we all know is really difficult to make. And I just think the market is shifting. It's giving less credit to cash flows further out into the future, you know, these high growth stories, and a lot of other really popular stocks that I think a lot of these investors have owned have gotten absolutely killed. So you may be in a situation where these folks have to sell what they can. These stocks have levitated, and then I also wonder kind of where new buyers come from. Maybe the price recovers back to previous levels. It's been kind of flat all year, but what's that next catalyst, and when do you get out, and why? Those are all questions I still have.